What if I told you China just sent the world's biggest economic signal without spending a single dollar? This is Kenya News Update today. Coming up, you'll discover why a 9-day holiday has global investors on edge and what it means for your pocket. The Lunar New Year just ended in China, and the numbers are in. But here's the twist. The data shows a recovery that's strong enough to kill hopes for a massive stimulus. That's right. The world's second largest economy is healing on its own terms. And that changes everything. Meet the Chinese consumer. After years of pandemic lockdowns and sluggish spending, they finally hit the road. Rail travel smashed a single-day record. Hotel bookings surged. Duty-free shopping buzzed. The holiday showed a nation eager to travel and spend on experiences. But here's what nobody's talking about. They're still watching every yuan. The spending rebound came with a huge asterisk. Consumers remained fiercely price-conscious. While the number of tourism trips grew, the average spend per trip actually dropped. That's right. More people traveled, but each person spent less. It's a sign of persistent deflationary pressure that Beijing can't ignore. And then, something shocking happened in the data. The total spending growth slowed down from last year. It climbed by 5.5%, but that's a slowdown from 7% in 2025. Such trends reflect better sentiment from a longer holiday, but consumers remain budget cautious in general. That's a direct quote from Morgan Stanley. This isn't just a holiday story. This is a massive policy signal. For months, investors have been begging Beijing to unleash a huge consumer stimulus package, like the cash handouts the US did, but China has resisted. Instead, they've offered trade and programs and vouchers. And now, with this better-than-expected holiday data, the big stimulus is likely dead. Policymakers are likely to build on the positive momentum and introduce targeted incremental easing. That's the new plan. Small, surgical moves, not a giant bazooka. The annual parliamentary meetings kick off next week. Premier Li Qiang will announce the year's targets. The message is clear: manage expectations, sustain the recovery, but don't break the bank. Here's the part that will blow your mind. To get this data, China literally extended the holiday. They added an extra day off compared to last year to encourage spending. And it worked. Families traveled together. That shift is driving demand for larger rooms and family-friendly configurations. One of China's largest hotel operators confirmed it. But the official figures may not capture the entire picture because many people took personal leave too. So the real spending might be even higher. This creates a huge global tension. Some economists say this is a smart, sustainable recovery. China is fixing its economy without creating a debt bubble. Others warn it's not enough. With consumers still so price-sensitive and deflation lurking, the recovery is fragile. If it stumbles, the shockwaves will hit commodity prices, global trade, and stock markets from Nairobi to New York. The stakes are immense. For Kenya, a stronger China means stable demand for our exports like tea and coffee. But a China that's too cautious could mean slower global growth. The world was waiting for a Chinese spending spree. What we got was a calculated, careful comeback. But if consumers are still so cautious, can this recovery last? Do you think China's strategy of small stimulus moves is enough to power the global economy? Or are they risking a bigger slowdown? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking global business news.